Okay, I've got a quick screen warning on the size of my screen. Doesn't actually tell me how to how to change it, so something I'll have to do in settings. I don't know, is anybody attending? If not, it's just a stream. Okay. Well, alright, okay, yeah. And and do we have any questions for the day? Okay, and I think Gareth, you did want to look at something specific today, did you? Scalping. Okay. Is that Mac or PC? Well, for me, PC. And but we're looking at oh dear. We are looking at scalping then. Anything you fancy? Okay. Fair enough then. So, well, scalping can be just your knowledge of technical analysis, and I think generally speaking, you need to make sure that you're not trading in front or behind of any support and resistance. So let's take let's not look at that. Well, let's look at the minute chart. Say if you're scalping on the minute chart here. What I'm going to be looking for here, I've got a few levels in from earlier 4-hour levels, actually. So it doesn't matter what strategy you follow. You should have some basic knowledge of technical analysis. So you should be able to identify support and resistance levels, trend, kind of breakout structures, using the indicators as leading indicators, not lagging indicators. I use the stochastic for the cycle, the trend, and the MACD and RSI for confirmation of trend and indication of a failing trend if it's divergent. So if you were looking at trading here, for instance, you know, it's a trend flow, isn't it? You know, it's come back to support and resistance. You've got to ask yourself, is there anything in the way of the trade? Well, in this one, unless I can spot it, going back quite a way, let's go back even further. Let's go up to 1,000 units or something, about 10,000 units. Might take a little bit longer. Okay. So we have this resistance here on the minute chart is prior resistance. So I just want to widen this chart out here. Bear with me. My mouse is playing me up. So it's good to scan back and look at, you know, what are we looking at here. So we're actually looking at this high being a major it's not just when you look at it in isolation there, it looks like it's a free window. But when you look at it here, it's actually hitting these support resistance lines here, yeah, which is all the way back here as well. So that worries me, in as much that if I'm bullish, I've got quite a strong resistance point there, so I might think that's a free window looking at that there. And yes, I might get a 1-to-1, but what else have I got there? I've got bearish MACD, I've got I've got lower lows, I've got divergent lows on the RSI, and I've got a highish cycle, and the moving averages have crossed over. On the minute chart, you know, you could use that for a bearish trade signal, which I do, but not on the minute chart on some of my programs. Quite successful on the scalping side, just take off a few pips. But some of them are on crossovers with some other criteria. But and they do quite well actually, about 95% success rate, I think it is. But so scalping, I'd be looking at you'd be looking for take it out before the high anyway. So you might just say, okay, if that does go bullish, and you might look at the 5 minutes. For another picture, you might look at so there's the 5 minutes. If I get a nice bullish candle there, that's a much better picture to take. It hasn't finished yet, got 30 odd seconds. And then, but that's actually a trend flow. It's not really scalping, but it's you could class it as scalping because you're just nipping off a quick 1-to-1. So if I was trading that, I've got 4 point, it's down here my candle size. I got 4.2 pips, and then you could just you know, if I would put $20 on there or whatever, I'm not going to do it because I'm not really analyzing properly. I could, you know, drop an order on there, and then just scalp off a quick sort of how big is that candle? I said 4, so that would be 80 odd pips for a 1-to-1, maybe £100, yeah. Sorry, I said pips, I meant pound. If you were to take that order, yeah. Now I'm not particularly happy with that order. The lower time frames, the 1 minute, tells me it's looking marginally bearish, but that could rule itself out. But scalping is about using your strategy, but on lower time frames. Yeah, wherever trade you enter, you've got to enter on a logical. Do it, yeah, do it. Put the order on. Oh no! Oh look! Oh no, it's there. You take it off. So yeah, I mean, I'm not going to trade here because it's but you could whatever. Scalping isn't just about nipping when you think something is going your way. If you want to do it logically, because you just make a mess of it, really. That's what you're going to do. When you're scalping off, you're basically going down to the lower time frames, but you're still using the strategies. So, you know, some traders would trade £200 a pip, yeah, and they're looking on the maybe the 200 ticks charts, yeah. Here's the 200 ticks charts, yeah, and which is very similar, isn't it, to the I don't know what the time scale is on there, and I've lost that there. The time scale on there is about a 3.5 minute time scale, so give or take. So it's let me just move that out of the way. But if you're looking on the text charts, for instance, you might be looking at the 15-minute charts and the text charts. or you might be taking it off the hourly. So, question, you've got this resistance here, pop it in. Am I short? Well, the hourly suggests that I'm possibly short because you have this resistance point here. So I don't really want to be scalping off bullish. I've got that higher up resistance. It might get me a 1-to-1, but there's too much on the higher time frames as bearish, really. And even if you're wrong in that assessment, it doesn't matter. The structure isn't there. So whatever you do, you don't just jump in on any trade, whether it be scalping, having a strategy on ticks, minute charts, hourly charts, or the medium to higher time frames, even the 4-hour, 8-hour, 12, 16 daily or weekly charts. The strategies are all the same, and you don't just enter and snap off. Generally speaking, you enter based on logical structure of the geometry of the charts. Make sure you've got no support and resistance in the way. The only difference I'd say is with scalping is that you can, especially on the lower time frames, you can risk higher amounts for the same amount of risk because you're trading a far smaller window of pips, and then you might just scalp off the 1-to-1. If you get 5 pips and you have a 200-pounder pip trade, that's £1,000, and as we said, look, that was looking bearish, so it is actually coming down more bearish. I don't know what the 5-minute there looks like. Can't actually see it. Don't know why. Yeah, okay, yeah, see, it has broken low. I have actually traded that before, believe it or not. Because when you see everything, well, that all looks bearish. If you read Trading Bible, Mark Douglas, isn't it? Trading in the Zone. One of the things stated there is, well, if you're looking at a trade like that and you don't think it's bullish, why aren't you trading it bearish? And that's when they're talking around emotions and why you do certain things and why you don't do certain things when you're trading. But his logical reading in Trading in the Zone was, if you're looking at a trade like that and you say and you state into yourself, well, I don't think that's bullish, why isn't your order on bearish? Well, yeah, I could do that. Yeah. And how does that look on the minute chart? It's this is what you're going to be looking at. So I have actually done that. I've actually put the order on and said, actually, no, I think that's bearish. So quite often when you see that and it goes the other way, it goes the other way quite well, and you can take a good 1-to-1, or even just take partial profits, which is scalping, off of the trade. The 1-minute chart on there, and this is just a pullback. So you would speculate that this would come down, lower. Maybe I've got this support here. So, but it could possibly break that support and continue lower. So I think that you may end up getting a bit of consolidation here, because you've got the support, you've got the resistance. So this may be essentially a consolidation zone. It's poked through there, but you'd be looking to come out before these lows, basically. So the only real thing really in your way there are these lows, and then you got your trade coming short there. Now, arguably, you might want to say, all right, I'll wait till it breaks that resistance line there, which is just below there. It's only a pip or so. And then enter on the break of that support resistance area there. Yeah, which is, what is that historically? I don't know. Oh yeah, it has got some support resistance there. You can see those touches. It's poked through, touched, and okay, it's this resistance here as well. So and it looks like it's further back as well there. So it is a significant support resistance level, this, and it's broken through. So arguably that's a reason to go short. But scalping is simply just that. It's nipping off quick profits. So you could say, okay, my risk there is 6 pips. Yeah, plot on your spread, but call it 6 pips for the sake of it. Decide what your maximum risk is, and then you just take off what you want. If you were to come in before there, you probably want to come out before the monthly pivot, yeah, where it does actually seem to be bouncing off as well, and you would just scalp that off. And if you did that a number of times a day, you build up a gradual profit over time. It doesn't have to be a full 1-to-1. You're just nipping things off. Even if you took 50% of your risk, if it depends how much you're risking. Again, but if you're risking £200, that's £100 each time. Do that a few times. So that's only 3 pips, and you've got £100. Yeah. So was it 3 or 4 pips? Can't remember. It's actually sorry, it was 6 pips. 6 pips roughly. Yeah. Okay, 6 pips. I'm forgetting myself. Just still recovering from COVID over Christmas here in this household. So yeah, but you could have then nipped off 3 pips or so. 3 pips. Are we 3 pips yet? Let's do a quick ruler. 3 pips is there. Yeah. So and then you would just nip off £100, and that would be a trade. And then you just wait for the next one. Maybe look at another chart, but I tend to like to just stick with one chart when you're scalping. Euro dollar I find quite good, and I'll nip off those trades. It just gives you a quick profit. And if you can see something that's running, obviously you just let that run. You don't necessarily take that off. But there are some reasons to be a little bit suspicious of support resistance. So you got the monthly pivot, you got the high that needs to be broken. That's got previous historical significance. But it's certainly coming down, and you might expect that to come down further. So you could chance your arm, but then that's not really scalping. That's a trade, based on your knowledge of the chart movements and technical analysis. Scalping is simply that, quick profits off the markets. The fast-moving markets, I mean, I'm not a news trader. I don't like news trading. It's too dangerous. You can get really volatile moves, and you can be spiked out easily. But certainly around 6 p.m. on Euro dollar, you can get some really good trades. And always remember that. Ask yourself when you're trading, if you're not bullish on a trade, then you must be bearish. And if you if you're scared to trade it bearish, then what's your analysis telling you, really? So I think most people who've been trading for a while have read Mark Douglas Traded in the Zone. If you haven't, give it a read. Get on audiobooks, whatever, have a listen to it. And it has more significance once you've been trading for a while. So that's really, look at that spike there, right? So I don't know if there's some news there. There's probably some news. I don't know, is there? But you've got a little bit of volatility there crept in. I know there's a couple of speeches today. Where are they? Okay, let me house bookmarks. 1 second. ID economic calendar. And well, we got any news out? What time is it? 6:30. Give me 1 second. Okay, well, you've got the 6 o'clock speech actually. FOMC Kaplan speaks. It's only a 2-star. You've had the Fed Chair Powell speaking today as well. But nothing too wild and exciting there. I just need to get my stream back. 1 second. Okay. And look at that move, that one, yeah. That's just volatility. That's not what you want. If you had a trade on there, obviously you'd be spiked out very quickly. You wouldn't be able to probably catch that at all. And this is why you don't really want to be trading news. If you were short there, you know, that's it. You're spiked out. End of story. I don't think that was news. Something may have happened. It might just be market orders triggered off the monthly pivot or something. That's the type of thing you see if you have direct market access. So yeah, scalping is just using your strategy and well, strategies we use anyway, trend flow breakouts, divergence type strategies, many divergence, convergence that I use, and one or two others, and just nipping off money very quickly on the lower time frames. You can be out on the minute charts and on the ticks in just a few minutes, and sometimes get some, you know, within 15-30 minutes, get some really good profits if they're runners. So it's that's the euro dollar 200 ticks chart there. That's spiked down, and now it's forming more structure. So now on there, actually, you've got on the 5 minutes, you've got volatility. On a ticks chart, you've actually got some structure. You've got some support. Got a high, low, almost an equal high, higher low. And that's what you mean by geometry, the actual shapes that the charts form on the chart. And you just scalp off the quick profits. I mean, it is literally nipping off money here, there, and everywhere. And when you see something that looks good, you just, on the lower time frames, you just let it run. But you know, you might nip off, depending on the amount, you might nip off £20, you might nip off £100, or £200, or even you know, thousands of pounds, depending on how much you trade in. Because that's the issue with trading, is that, and that's the allure of it. I could, you know, I could trade that if providing you've got the capital. I could risk £200 and take off £100, and the chances of me getting, you know, half of that candle are quite high if it goes that way. So if it's moved down, you've got confirmation of the move by it coming down, and you have an order there. So if it's come down, it's actually moving that way. You've clicked in the order. I only need 3 pips. 3 pips is half the size of this candle, and you know, I've got £100-200 in my pocket, and just that happened in less than 2 minutes. So that's scalping. That's what scalping is. But you're still looking at chart structure. You're still looking at chart geometry, and you're still looking at strategy in order to make those entries. Now that's not actually a strategy I put up going short there, but it's just from knowledge. I know that when you have those indicators and everything looks bearish, if that candle doesn't take, the likelihood is it's coming down. In this case, we've had a bit of volatility, and any trade would have been pipped out very, very quickly. And so I'm not sure what caused that, but that can happen. That's just one of those things. You got one lost trade and the way to go. The majority of the time, that would pan out. And if I was scalping, that would be taken out around about here anyway. So I already had my money. Yeah. Okay. But I do go right down onto the 100 ticks is probably a bit messy, to be honest with you. I don't think I've got 100 ticks. I've got 100 ticks. I've got one tick. You know, when I actually started out trading, I used to trade on one tick. Sorry. Yeah, 100 ticks. And it's not that much different, is it? Not much different at all. So, give me a second. It's just gives you the structure. So if this was, let's see if I can find something to show in terms of well, I'm not seeing anything. I don't want to bore people too much, but essentially, if you were trading off a candle on the hourly, you could scale down to the ticks, 200, 400 ticks, and look for the structure of the trade. So you might see don't know where it was. It was something euro dollar earlier today. There was a consolidation breakout, bullish. Oh, I think I can't remember if it was euro dollar or DAX, to be honest with you. Memory's a bit sketchy by the end of the day. Yeah, no, forget that. Don't know where it was, but essentially, if you're looking at you have to look at the structure of the high time frames for confirmation or direction. Look where you go in. Fib level confluence. Yeah. So where was I? Sorry. You have to look at the general direction. So let's just say I'm scanning the 4 hour. So when I scan the 4 hours, maybe let's move on to a little bit of scanning as well. I'm looking for structure. So I've got 4 screens up here, and I use 3 of them for each scanning window. Bit slower because I've got so much up with the stream and everything. So I'll have 3 of these windows now. Well, I have 3 of these windows, and I'll just at a glance look at the structure of that. And I'll just have a quick look to see if I can see anything. But I can't. But let's just say, for instance, that I don't know, Monday or the other day. I can see one here on pound Swiss. Actually, they're earlier. They're not current. I'll see if I can quickly find anything current. Doubt it. It's not even close to the hours, so have to be nearer to 8 p.m. But see if there's something on the prior candles. We'll get there. Where's this? Okay, let's look at Brent crude. What the hell? I haven't got on here. I haven't got the. But this is Monday, I think. Let's just check. Yeah, Monday 11th. So that's the. This open is 8 o'clock candle. So what you've got here in the afternoon then is that. So if you just come to the screens and check every 4 hours, and you have an at a glance sort of set up like this, you can quickly see where the structure. So, we have some trend here. It's bullish. You have to check your confirmations and everything else. But here, that's your trade. Yeah, this area here, and you just look at that and you set your order, providing it meets your strategy criteria, which we don't talk about here, but providing that that's a good structure, isn't it? But if you know a little bit about trend flow, that is a good structure. So could you? No, I probably wouldn't looked at the spinning top, but you could have. You would have been in the trade for a while then, stuck negative. But I like to see a green candle, and then the break of this candle is actually the entry, and then the next one doesn't really break it. It might have, and then prices popped up. Yeah, you got your trade. That's not a scalp; it's on the 4-hour, so a higher time frame. Basically, what you're doing is you're looking there. Yeah, let me just highlight that and see. If you wanted to scalp that off, not quite used to this platform yet, but let's just have a look. Okay, let's hopefully that will highlight it. Let's go down to 400 ticks or something. Okay, 25 units. My God, please. 10,000 units. That doesn't touch it either. Why is it not touch? Oh, unless it's all the way up here. Okay, there it is. Can I see it? Thought I saw it. No. Where are we here? Yeah, it's November 2020, so we're up here somewhere. Doesn't come through on the ticks. I'll tell you why. Because it is ticks. Let's see if it comes through on the 5 minutes or something. No. Okay, I'll have to actually check the time. It was Monday around about 12 or 4 o'clock, so it's this area here that you're looking at. Yeah, that's definitely it. That's one-ish, this sort of consolidating area. Not too much there in terms of structure, but what you might want to look for is, let's just come up to the 4-hour again. Let's put a line in. We like lines in trading. We use lots of lines. Okay. 5554.0, nice and round as well. Let's come down to the 5-minute chart. So that's the area there. If I can get that arrow back up. So we're looking at this area here, which as you can see is reasonable support resistance level, and then it's kind of broken out. That's going on to Tuesday. It's taking a little bit of a while to get there, but a bit of missing data there. Don't know why that is. So that's 8 o'clock in the morning. It's maintained its resistance level. and then it kind of pokes through, and it's really sort of broken out to that area here, but this is on 5 minutes, mind. And then not got much on that time frame. So what you would do is look across all the time frames. You'd have more than one window. Look at the 1 minute, look at the 5 minute, and so forth. Look at the 3 minutes. Look at the ticks. See what structures are there. And then it's a bit of bad data, I think. Oh no, it's early morning. Sorry, it's probably the market's closed. So on Tuesday, then you're kind of broken out on Tuesday, and in the morning, and it's just popped up all the way really. So you've been in the trade, it's hung around for a while, and then it's popped up. But you're not scalping, then you're just looking at your direction on the medium-term time frames, setting your orders, assuming your confirmation is there, and then taking it from there. But you can scale down and look for a lower time frame setup and scalp your one-to-one off on the basis of the directional bias from your high time frame assessment. Yeah, and then you would be scalping off money from that higher time frame move on the lower time frames, and probably putting on more than one trade if it comes your way. It's another way to look at scalping, and it's just come down to that level again, look, which is reasonably significant on the lower time frames. Get that out of the way. Where did that come from even? There you go. So that was Brent crude on Monday, and you can decide to take the 4 hourly orders, which there's maybe been 4 or 5 4 hourly orders this week. On the charts that I scan, sometimes you might just get one, but most weeks you'll get 3 or 4 at least on the 4 hourly time frames. Well, if you watch my other streams, you don't really need a lot of trades to do well across the year. So if you're getting anything between 2 and 4 trades a week on the 4 hourly, you don't really need to be on the charts that much either, do you? I mean, I like to sit on the charts, but you don't actually. All you have to do is come back and check the 4 hourly charts every 4 hours. Now what's that? That's 8 o'clock in the morning, 12 o'clock in the afternoon, 4 o'clock in the afternoon, and 8 o'clock at night. So it's 4 checks a day. I mean, some people get up at midnight or 11 o'clock to check them, but I don't know. Why do you do that? I don't know. No, I want to be in bed, going to sleep. Trading should be around your lifestyle, not your lifestyle around trading. But people get allured to making millions of pounds, and the amount of people that have lost money ignoring my advice on things like Bitcoin and how to trade is and they've lost lost all their savings, basically. So and some of them to scam artists on the internet as well, who offering you doubling your money and other things. Who's going to give you double your money when you don't even know how to trade? Get a life, really. So what's the time as well? Okay. So that's a little bit about scalping and scanning. All I'm looking for here is a little bit of structure. So we showed what we would have seen on Brent crude. Let me see if I can get another one up. Would have been that on Monday morning. I saw something else just now. I can't remember. I have to scan back, but just from memory. 1 second. So just remember with scalping, you're not just guessing the direction. You still have to apply strategy. So you look at the higher time frames for bias. If you're looking to trade throughout the day, the question you should ask yourself is, does it make sense on the daily? You know, where's my daily going? Is it pulling back? Is it bearish? You know, is it in a bullish trend? Is it consolidating sideways? Do I not know where? If I don't know if the direction of the chart isn't clear, sorry, why are you trading it? Why are you looking at a chart like that instead of something that has some really good, price action? And that's messy, isn't it? Well, that's got a better trend. So why aren't you looking at that instead of that? Why are you looking at the messy charts with lots of lines where you can get stopped out? Let me look at the structure on Euroord. Yeah, a lot better. Why aren't you looking at Euroord? Why are you looking at messy charts? Yeah. I was looking at pound Swiss. Why was I looking at pound Swiss? I'm looking at the hourly bloody chart. I don't know. Should have gone over here, sorry. Give me a second. It's a bit slow because I've got the streaming going on and the Pro Real Time up as well. Okay, so here's pound Swiss on the 4 hourly. If you were looking at that, when is that? Wednesday the 13th. So if you were looking at yesterday, yeah, at 4 o'clock, that's 8 o'clock. So that's actually the midnight candle. Yeah, so I probably wouldn't have been looking at that. But having said that, that candle's not too bad. You would just see that, or you would see that. Yeah. This is 8 o'clock, 12, so that ends at 12 o'clock. So at midnight, if you'd been up, trading, you'd have seen that picture. And if you see that picture and you don't think that's worth a second look, you want to ask yourself, do I need to go back to the books again? I need to learn what a strategy is, and how to implement it. Trend flow, breakout, fib level confluences, fib level type strategies, bouncing off the fibs, taking trades off the 50%, the reversal sort of trade where things are pointed out earlier on euro dollar isn't actually a strategy. It's just but that it just it is a strategy that comes infrequently. So a strategy is just recognition of a repeating pattern within the market. If you can find something that repeats itself and a means of confirming when that pattern is more likely to repeat itself, you've got yourself a strategy. So that's all you need to do. It doesn't matter what it is, as long as you can implement it properly and it makes you money. And providing you can do that consistently, you'll be a successful trader. So it doesn't matter what it is, but you've got to understand the basics of trend flow, support, resistance. You've got to be able to identify these things in order to trade any strategy. So if you can't recognize when there's some resistance in the way or there's support in the way of your trade, then you're going to fail more. You'll be losing money and you won't understand why. So all these things come into play, but essentially when you're implementing a scalping strategy, no matter what it is, it's still a strategy. And you get confirmation from, say, the 4 hour and the hourly in terms of levels. Some people do this on the Dow Jones, so they'll set their levels on the 4 hourly and hourly, just draw lines on the support resistance levels, and then you open, they'll trade the breakout and the trend flow between those trading windows. And some people trade like that, and will just trade the Dow Jones and nothing else. And how much money you make is dependent on not just your ability, but your pot. And one of the allures of trading, I'll come back to the questions in a second. One of the lures of trading is that you can make your money up from small amounts of money. If you watch my prior streams, you could see how quickly you can build up large amounts of capital from just £2,000. Now, £2,000 might be a lot of money for you, but it might not. You know, it's something people spend on a crappy car or a cheap 125 motorbike for themselves or something. You know, it's and you invest in that in your learning to trade, and hopefully become a successful trader. But you can actually become quite a wealthy trader once you have your capital. Then I used to trade with a guy, I won't mention his name. He's an Indian guy, and he lives in Silicon Valley. And his trading pot was £500,000. So his 1% is £5,000. So every time he's scalping off a 1-to-1, he's making £2,500–5,000. Yeah. Some of the multi-million-dollar traders, they'll risk $250,000, 250,000, and make 750,000 on a trade or 500,000 on a trade. And how often do you need to trade? I say this to people: well, if you're making £750,000 or £500,000 on a trade, how often do you think you need to trade? Hell, once. For the average guy, once in your life if you've got that money to risk. But yeah. So, but you can build up that sort of money. It doesn't take long to build capital, and that's the allure of trading. Apart from being your own boss. And if you make mistakes, it's entirely down to you. So you're the one to correct yourself. You can create that wealth for yourself, and you can get up to a level where one trade a month you might be comfortable with. There's some people who will just keep 50 grand in their trading account because that's £500 risk, and they can make a good living out of that. That's what they do. They keep the capital and do other things, and just 50 grand in their account. They get an accounts manager for most companies for 50 grand as well. So they get a couple of other perks probably, but to be honest with you, I wouldn't want some guy who's a sales rep talking to me or ringing me up all the time, pain in the ass. It's good to socialize, but unless you're offering me a lot of money for something, you're just wasting my time on the screens. So anyway, that's the way of it. So yeah, you don't need a lot of money to start out in trading, and what you spend in university and things is phenomenal. So the amount of money you're risking in trading is negligible compared to what you willingly spend elsewhere in life. So let's see what the questions are. Do it. Okay. Yeah. No, I was with the £20 a pip. I was just using that as an example. Yeah. But it's not difficult to get up £20 a pip. If you're risking, I don't know. You could risk £20 a pip with a £10,000 account and be very comfortable, margin wise. 5 pips is 1%, isn't it? So if you're trading on lower time frames, obviously if you've got a £1,000 account, you can't do that. But what you have to do is build up your account. If you can't build up your account from £1,000, right, and you lose £1,000, then you're going to do the same thing with £10,000. You're not going to build it up, only you're going to lose it. So would you rather lose £1,000, or would you want to lose £10,000? If you can't trade, say, £1,000 or £2,000 account, then you can't trade a £10,000 or a £20,000 account or a £100,000 account. You have the allure of making a lot more money, but if you can't do it with smaller amounts of money, then you can't do it. You know, you have to learn what you're doing wrong. That normally involves some mentoring and support. You know, there's nothing in life that you don't learn through getting feedback and some teaching. You don't just do things naturally in terms of learning. You have to get some guidance and support, and it's the same thing in trading. You will need some guidance and support in order to, so point you in the right direction in certain things. Why are you doing? Why are you losing more than you're winning, for instance? We're all affected by emotions, and you have to start to realize why that is, and what is it that you're being affected by. What is it that's influencing you, and what can you do about that? Why is it you can make £1 million on a demo, and then you come to the screens and you lose all your cash? This is what people do. I just glanced on IG the other day that 76% of people in IG, I think it was back in 2016, retail traders lost money. 76%, that's phenomenal. It's like, what if you had 76% fail rate in school or colleges? 76% fail rate. They'd close the college, wouldn't they? Or they'd close the university. Because 76% fail rate is phenomenal. But people jump into trading and think they can do it because they think, oh, I can do that, that's easy. You know, I can do that, give us a job, sort of thing. But there's understanding trading is very easy. Implementing trading takes experience and guidance. I'm not sure. Do you have to set it for all charts, maybe in settings? What was being referred to there? I'm not sure. But if it comes up, I'll answer the question. But yeah, you can set some things to happen on all charts. What I tend to do is, if I want to put another chart in there, if I open one up here, it'll duplicate anyway. But you can just on this particular platform, it'll vary. But I can right click and duplicate chart somewhere. Duplicate chart, and it'll give me up a second chart. So I only have to create one chart and then click on that, and I've got duplicate charts to put the other windows in the screen. Yep. So scalping, again, just to revert back to that, is lower time frame implementation of your strategies. Well, you can't help but avoid Bitcoin because a lot of retail traders have been banned from trading it because too many retail traders are losing a lot of money on Bitcoin, and the retail traders have actually been physically stopped from trading it. Those in it can actually, with some companies, I think it was an FSA guidance that came out that retail traders shouldn't be trading Bitcoin at the moment because they're losing too much money, and they stopped retail traders from trading it. So it probably isn't possible, but those in it already can stay in there and they can close the trades out. So if they were in it, fair enough, they're probably doing okay, but it has pulled back on itself, and only professional traders can trade Bitcoin now. I think because it's been hyped up, it's overvalued I remember Bitcoin has been stopped from being traded before. They've actually put on the breakers and they've physically stopped people trading Bitcoin. Everyone, professional traders as well, because it was so volatile and ridiculous. Um, oh, the circle. Oh yeah, yeah, okay, yeah, the circle. Yeah, probably. There's probably a setting there I could have applied it across, but I do find that no, I wouldn't use that in trading anyway. But what you put on the minute charts or um, divisors of something that's divisible by minutes, like hours or whatever, um, doesn't come through on ticks because then they're not time orientated. They're ticker orientated, and therefore they don't. The drawings don't apply themselves across the time frames in the same way. Anyway, and this is a version 11 which has been upgraded from 10.3 recently, so I'm still tweaking the settings. So yeah. And then mine with the circle. So yeah, that's Bitcoin. Retail traders have actually been stopped from trading it. So yeah. No apologies to Bitcoin there. I think it's a companies hyping up Bitcoin, and it's shark companies who want retail traders to invest in it for the benefit of themselves. It's not about the actual value of Bitcoin in real world, because there isn't one, really, is there? They're still trying to ponder over that one. So yeah, retail traders have been stopped from trading Bitcoin. I don't know when that will open or change. You can still close your trades out. You just can't put any more trades on. I remember that trades in the market are not guaranteed. If they went ridiculously high and you wanted to sell, well, if you sell into somebody on the other end, that assumes that they're buying it. They may not want to buy because it's too high. So can you get rid of your trade? Yeah. Sometimes you just can't close the trade out. Sometimes because price is moving too fast and you can't get the price you want. I know somebody who dropped quite a few £1,000 because he traded the wrong way. Couldn't, so volatile he couldn't close the trade out and he lost quite a few grand. It's a guy from America, and it's just one of those things. Sometimes you can click the button as much as you like. The trade won't close, and you have to wait for that to happen, and then you say unable to execute. You have to close a little window, try the trade again. By which time the trade has moved, quite a long way. And depending on how much you got on per pip, that can be thousands of pounds. So you've got to be careful with trading. It's almost like a game when things are good, trades are easy to execute, but there are times when you can't close a trade out with volatility, when markets gap and all this sort of thing. That's just the way it is, and you can end up losing money. That's why they bring in guaranteed stops and things. So, and you only lose some of them. Yeah, so I think we're up to 7 o'clock now. So just remember that scalping is basically a lower time frame implementation of the strategies that you apply. You're not just looking at and say, oh, I think that's going that way, I'll put an order on, click the at market and hope it goes your way. That's pissing in the wind, really. You have to implement whatever your strategy is. You have to implement it, and scalping is just doing that on the very low time frames based on the higher time frame bias movement. Yeah, and that's what you're looking for when you're scalping. You have to scale down and get your strategy entries based on the direction and the levels, normally off levels from this. Might be the 4 hourly, and you'll be taking trades off the ticks, 200 ticks, or the minutes charts, or the 5-minute charts, whatever. Yeah, That's all scalping is, but it's still an implementation of your strategy in a structured and logical way. It just moves faster, so it's difficult to think. Okay, that's it for today then, and hope that helps. Don't forget to press the like button and subscribe if you've not already subscribed, and we will catch you again. You take care. Hope that helps.